Target's Q2 2025 earnings, a win tempered by strategic uncertainty. Target reported both GAAP and adjusted earnings per share, EPS, of $2.05, down from $2.57 a year earlier. Despite the decline, this figure modestly exceeded the consensus estimate of $2.04, delivering a marginal beat. Net sales stood at $25.2 billion, marking a 0.9% decrease YOY. Comparable store sales were down 1.9%, driven by a 3.2% decline in in-store sales, though digital sales countered this trend with a robust 4.3% increase. Operating income fell by 19.4% to approximately $1.3 billion, with operating margins compressing from 6.4% to 5.2%. Gross margin slipped 1 percentage point to 29%, challenged by markdowns, tariffs, and unfavorable category mix, though partially offset by gains in advertising and non-merchandise sales. SG&A expenses held steady, growing just 0.1%, despite ongoing investments in store remodels. Non-merchandise streams, including Roundel, membership, and marketplace fees, grew a notable 14.2%. Target paid $509 million in dividends, a 1.8% per share increase, but did not repurchase shares in the quarter, despite $8.4 billion of authorization remaining. Return on invested capital, ROIC, dropped to 14.3%, compared to 16.6% a year ago. Target reaffirmed its full-year expectations. A low single-digit decline in sales, GAAP EPS projected between $8 to $10, and adjusted EPS of $7 to $9. Despite the slight earnings beat, Target stock plunged by 6% to 10% amid investor unease, marking one of the largest single-day drops in recent memory. The primary catalyst behind the sell-off was the announcement that longtime COO Michael Fiddelke, a 20-year company veteran, will step into the CEO role on February 1, 2026, with Brian Cornell transitioning to executive chair. Investors hoping for an external hire, seen as a signal of strategic reinvention, were disappointed, triggering sharp market backlash. While internal promotion highlights continuity and governance strength, critics argue it may lack the spark needed for meaningful turnaround. As one analyst remarked, there won't be change when change is needed. Others note Fiddelke's deep institutional knowledge could provide a steady platform for revitalizing product assortments, guest experience, and operational efficiency. In Q2 2025, Target delivered a modest beats on EPS and revenue, driven